Yes, it is possible to make a special deposit with a non-negotiable bill of exchange, but it may depend on the specific terms and conditions of the deposit agreement between the depositor and the bank or financial institution. A special deposit is a type of deposit made by a customer for a specific purpose, such as collateral for a loan or to secure a specific transaction. Non-negotiable bills of exchange can be used as collateral for loans or other financial transactions, but their acceptance may depend on the specific requirements of the bank or financial institution. If you are considering using a non-negotiable bill of exchange as a special deposit, it is advisable to consult with a financial professional or legal expert who can advise you on the specific requirements and implications of the deposit. They can also help you determine whether a non-negotiable bill of exchange is an appropriate form of collateral for your specific transaction. If you want to send promissory notes to the U.S. Treasury, you'll need to follow specific procedures to ensure they are properly received and processed. Here are the general steps you should take. 1. Prepare your promissory notes. Write up your promissory notes, making sure they include all necessary information, such as the amount owed, the repayment terms, and the names and addresses of the parties involved. 2. Contact the Treasury. Contact the U.S. Treasury to obtain information on the specific procedures for submitting promissory notes. You can contact the Treasury by phone, email, or by visiting their website. 3. Submit your promissory notes. Send your promissory notes to the appropriate office or department within the Treasury, following the instructions provided by the Treasury. 4. Wait for processing. The Treasury will process your promissory notes and provide you with any necessary instructions for repayment. It's important to note that promissory notes are legally binding documents, so it is recommended that you consult with a financial or legal professional to ensure your notes are properly prepared and that you understand the legal implications of issuing them. A negotiable bill of exchange is a financial instrument that can facilitate international trade. Here are some examples of successful negotiable bills of exchange. 1. Letters of credit, a type of negotiable bill of exchange commonly used in international trade. It involves a bank guaranteeing payment to the seller on behalf of the buyer, based on specific conditions being met. 2. Bankers' acceptances, another type of negotiable bill of exchange, where a seller receives payment from a buyer backed by a bank's guarantee. Bankers' acceptances typically have shorter payment terms than other financial instruments. 3. Export receivables financing, a negotiable bill of exchange that enables exporters to finance their receivables by selling them to a financial institution. The institution provides immediate payment and later collects payment from the importer. 4. Promissory notes, a written promise by one party to pay another party a specific amount by a specific date. Promissory notes are commonly used in domestic transactions for short-term borrowing. 5. Factoring, this involves a seller selling their accounts receivable to a financial institution at a discount. The institution collects payment from the buyer when due. Factoring is often used to improve cash flow and manage accounts receivable. These examples highlight the versatility of negotiable bills of exchange in facilitating trade. However, it's essential to understand the risks and benefits of each type before choosing one for your business. Buying a house with a bill of exchange check. Buying a house with a bill of exchange check requires the cooperation of the seller and a financial institution that can issue the bill of exchange. Here are the steps you can follow. 1. Find a willing seller. Identify a seller willing to accept a bill of exchange as payment for the house. 2. Agree on the terms. Both you and the seller must agree on the terms of the bill of exchange, including the payment amount, due date, and any other relevant information. 3. Obtain a bill of exchange check. Visit a financial institution that can issue a bill of exchange and request a check for the agreed upon amount. 4. Sign the bill of exchange check. Endorse the bill of exchange check, just as you would sign a regular check. 5. Give the bill of exchange check to the seller. Provide the check to the seller, who can then cash it or deposit it into their account. 6. Verify the payment. After the payment is complete, confirm the transfer, ensuring the house is legally yours. Not all sellers may accept a bill of exchange as payment, preferring traditional methods such as cash or wire transfer. Ensure you understand the terms and obligations of a bill of exchange, as mishandling can have legal and financial consequences. Depositing a negotiable bill of exchange into your bank account. Yes, it is possible to deposit a negotiable bill of exchange into your bank account. A negotiable bill of exchange is a financial instrument that can be bought, sold, or exchanged. It is transferable from one party to another, and its ownership can be transferred in part or in whole. To deposit a negotiable bill of exchange into your bank account, you must first present the bill of exchange to your bank for verification and acceptance. The bank will require the original or a copy of the bill of exchange, along with supporting documents verifying its legitimacy. Once the bank verifies and accepts the bill of exchange, the funds can be credited to your account for use. Be aware that banks have specific policies and procedures for handling negotiable bills of exchange. Contact your bank to understand the necessary steps and provide all required documentation to ensure a smooth process. In summary, while a negotiable bill of exchange can be used to deposit funds, it must first be verified and accepted by the bank. Follow your bank's policies and procedures carefully to ensure a successful deposit.